All right, welcome back for another episode of Carnivore Trades. Today is Thursday, April 20th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. So, what I talked about yesterday, we are entering the risk period, and I said there'd probably be some fireworks today, and we got them. So, gap down, nice little float back up, kind of a pullback here. And we rallied back up to the flatline. Qs actually went green. And one of the things I talked about this morning, you got to pay attention to those semiconductors and pay attention to those Dow transports. They tell you a lot about the market. You can see as soon as we gap down, green on the transports, big green, semis huge rally, and that told me that we were probably going to float back up here, which we did. Now, that didn't last very long, right? So middle of the day, right around 1:30, nice little fade, started off small and then big drip down here. And we're basically, we're just off the lows of the day here on the Qs and the SPY and really everything here. So pretty much everything trading at the lows of the day right now, pretty much across the board here. Is this the start of a major sell-off? It's certainly possible. I'm not convinced though. It's a nice sell-off, but the thing is, when you don't have a sell-off for a month and a half, every little downdraft looks like a major sell-off. Really, the last time we had any sort of real volatility, kind of had one in that Fed minutes day, but the last time was 322 here, and the bears did absolutely nothing to follow through. And this was a Wednesday. There's a Thursday, Friday. Today's a Thursday. Technically, there's just really no damage done just yet, and a few things here. The volume is incredibly light. It's almost as light as yesterday. And that's with this big, we just sold, we'll just call it 414 to 410. We just sold 4 points on the SPY in like 3 hours. That's a big move. It's not, we've seen bigger before last year, like 100-point moves on FOMC days, but it's still a big move. And you have 59 million shares traded at 3:49 p.m. That is peanuts. Like, that's still holiday volume. That tells you that it's mainly retail and algos, and that's really it. So what I think is happening, this is just Opex games. Like, we've had gap downs the last couple of days. We've rallied back up. A lot of people buying calls around that 413 handle, 414 handle. 415, and they burned out the puts earlier with that gap down and then rally up, and that, to me, it looks like they're just burning out the calls here. That's what it looks like to me. I've done this a long time, and generally, if they want the market lower, they don't wait until 2 o'clock. It usually will happen within the first hour. It doesn't mean you can't have declines. I've seen declines in the afternoon before, but there's just not enough conviction behind it to me. Could that change tomorrow? It's absolutely possible. Again, like I said, we are in the risk period now. I said yesterday it would start today, and we're definitely seeing the most volatile day that we have seen in quite some time. Q's down 1%, SPY down almost 1% there. But it's not broad-based either. You look at XHB, DR Horton reporting today, and these home builders, I swear, XHB still green, up 0.5%. If this is a major panic decline, it needs to be broad-based. Everything's got to be down, and down big, and it's not. I'm still seeing some green on my screen here, even though things are at the lows. Most of everything's at the lows here. There is still green on my screen. And take a look at the transports again. That's flat. That's 15 points. That's nothing. That's a crumb on the transports here. Semiconductors, not even down 0.25%. Nvidia is down nicely. Nvidia having a nice outside move down, and I was just telling my members this. Take a look at the momentum declining here. So you got about 3 weeks in between these 20 MA tests, and then you got about 3.5, 4 weeks, and now 1, 2, not even a full week in between that 20 MA test there on Nvidia. So this is losing momentum, and it's starting to put in a rolling top, but so very top heavy stock, as we all know. But in any case, semis, not showing a ton of weakness here, all things considered. When I see that, I can't get too bearish, especially when the transports are confirming that. Also, the Russell here, we talked about the Russell. Big picture, it's a lagging. Big picture. This is a bearish indicator, right? Because you haven't made higher highs in a while the SPY has. But today, on a short-term micro basis, you see the IWM intraday. It's still got a higher low. This doesn't look like panic to me. I think the VIX too. It's very cheap down here. I think the VIX may have bottomed today. You might get some backing and filling here, but I think it may have bottomed. But if this is a real sell-off, this would be up at 19 already. We would be up at least. And it's a 7% pop, but this is what happens when the market's not prepared. As I kind of mentioned yesterday, the VVIX, however, that is starting to signal some problems here. So that's up. That's basically to where it was on the 24th. And if you go back to the spiders, that was way down here when we had that big rollover off the FOMC with no follow through. But so VVIX kind of telling us a little bit. There's kind of giving us a warning there, as is the VIX just being as cheap as it is. We talked about this a lot the last couple of days, but right now, until proven otherwise, let me clean these lines up here. I don't care about the trend lines. This is a daily inside bar. On ES, you do have a rising wedge here, and that is getting, tested right now. But you still have a daily inside bar until you break this low. You're above the 20 moving average. Let's look at the bigger time frames here. And we'll go back over to SPY. That's all you have, right? So that's that big decline. That's all you have. Triple Qs. Weekly inside bar. Above the 20, 50, and 200. This isn't a bearish pattern. So I know everybody's going to look at it and so today was the cycle date. Today was there's no volume. There's nothing on the weekly. And until bears fall, and why they're coming in at 355 and bouncing us back up. I mean, if this was bearish, they should be following through and they should gap us down tomorrow and puke us. On heavy volume, I want to see 120 million shares, not 80 million on the SPY we're talking here. Because the bears have, we had those nice declines here during the banking crisis. We had that nice decline on the 22nd with the FOMC, and they just could not follow through. So right now we're getting close. We're getting close. We are in the risk period, which means that at any time we could get a high volume reversal. We could get a top in. I just don't really see it today. It's options X week. It just seems too convenient, right? So we gapped down, they rallied us back up. If they wanted to sell us, why did they let us float all the way back up? Look at this bounce. I mean, so this is just how it works here. You got to be careful of these games during Opex week because even Tesla's getting a bit. Look at this bounce here on the spiders. Now down 0.5%. Qs were just down 1%. They're down 75 basis points now. Look at this bounce here. Look at the Dow. Transports are back green now. Let me see a few other. Google is green. So this is, and another thing too. Let's look at bonds. I haven't even really thought about that yet. Yields are, bonds themselves, they have not been in a panic at all. So if you look at the 2-year here, this is just hanging out, right? It's not indicating any sort of panic. The ZB is actually off the highs. So it doesn't look like there's panic to me. And as you can see, look at that bounce there on the SPY. Wow. Gotta love it. So that's Opex for you. And that's why, you don't want to get too bearish when the volume's light, and you don't want to get bearish during Opex week unless you really see confirmation. And again, in that first hour, they'll push it down. So interesting price action here. Market set to close in 4 minutes. Let's look at let's go through our sectors here. So Qs, they're holding on to that 20 moving average now. Maybe that's a little bit of an algo buy right now, trying to save that area. Certainly can't rule that out there, but you still have an inside bar there on the daily. Nothing terrible. Either way you look at it, the Russell we just mentioned. Big picture, this is a terrible, bearish pattern here. That weekly, that's not good. Monthly, even worse. But right now it's holding up okay. We'll give it the benefit of the doubt. The Dow here, again, still daily inside bar. green bar, you're inside of that. It's hanging in there just fine. We'll give that the upside bias to 343 as long as the market can hold up. Over here to the semis, which we talked about, back green on the day, up just 10 cents, but still green. And again, I'm not going to get bearish with SMH green really ever. And you're seeing that right now. But big picture, again, big picture, difference between micro and macro. You have lower highs, and that's making lower highs while the market is, the spiders have been rallying up. This will be a problem moving forward. But today, SMH showing relative strength, and despite Nvidia taking a little bit of a hit there. IAGV cloud here, that's been weak all day long, although coming off the lows. With everything else kind of hanging onto that 300 handle, this might just sit at 300 for Opex. We'll see, but still holding trend and no problems. Again, upside bias to 310 if the market can hold up. Dow Transports, again, we just told you that went green. It's green to flat. Still can't get above that 50 MA though. Look at that. It's just right on top of it right now. 14,436 right now is the 50 MA. Look where we are. So we'll see if they can ram a close above that in here. 350. It's 358 right now. So we got 2 minutes. It's not of serious consequence, but again, we talked about this. If it gets above these areas above these pivots, we'll say 14,750 to 14,8. We'll give it the upside bias there, should the market hold up there. But transports, again, bigger micro versus macro, right? Transports still, this is not bullish here. Structurally for the market, this is a very bad thing that we have lower highs like that. So something to keep an eye on here. Again, bonds, yields coming in a little bit. ZT up 20 basis points is hanging in there. Okay, that puts the 2-year yield futures at 4.1. And let me just look at the actual yield. It's at 4.157. So that's a little bit higher there. Again, if that increases, if that yield starts to go back up, which it eventually will, that's going to be a big problem for the Fed right now. Markets can be okay. 10-year up a little bit as well, and the 30-year, which we talked about. It's hanging in there. Okay, this could be a little bit of a micro immature bear flag, though. If this goes sideways a little bit longer, this can go lower, and that will be a problem for the market, obviously, in the long term. But the Fed does want that long end of the curve down, so we'll see what they do here. But anyways, let's get over to these home builders again. XHB, what can you say? I told you guys $70. That's where it came off the highs pretty nicely today. It is getting a bounce with everything else. Take a look at ITB. We said it was going to pierce double top. This might be another blow off here. So you did get, this is one sector that might have put in the top today. Heavy volume, topping tail, shooting star, right, on heavy volume, piercing a double top with a gap up, already overbought. So this may have blown off here. I know DR Horton reported and that gap down and rallied back up, but then you had, drawing a blank here. Well, I know KB Homes was up big. Trying to think of Pulte's ticker, PHM. I always forget. Yeah, Pulte Home having a big day, and then Lennar also had a big day as well. But to me, this has got to be the most overvalued sector in the market. And once the top is in, these have a ton of downside. So, in fact, I'm going to show you this. Somebody just tagged me in this. Take a look at this chart here. This is home builder index versus single family homes sold. And like quite a divergence here. Those jaws have got to come shut eventually. And that's the, I can't remember the name of the index, but it's similar to the ITB, but I think it's HGI it's called. But either way, you get the picture there. Huge divergence between those home builders there. But, what can you say? The market can remain irrational. So in any case, VNQ hanging in there. Okay, still a potentially bullish pattern here, but weak below those moving averages. Again, 85.50 would be our upside target there. By the way, the Dow Transports did get above that 50 moving average, closing at 14,447. Look at the pop on the spiders into the close. Look at that move there. XLF coming back in. Fins. If this gets up into this area here, within the next couple of days, this could be a short. But if it pulls back first, I would like it a little bit less. But that's still a good area. And also kind of BAC. I kind of pulled back a little bit. I was looking for, 3140. I like this area, pivot low, breakdown bar, 50 MA. But you already kind of gapped down the last day. So I don't know if I like it that much anymore. But fins are holding up. They came back in a little bit. Broker dealers gave back some gains today as well. Again, we talked about that necktie, 50 and 100 moving average. 470 would be resistance. If this goes sideways, it can have one more push up. But again, big picture, weekly bear flag there. Rejection so far at the 20 week moving average. So we'll watch that. All right, over to crude. That was a big story today. So crude rolling over a little bit, down 2.5. I'm interested to see what it does here. Can it hold these moving averages? If it can hold these moving averages, by the close tomorrow, the thing is, I think I've been saying it has to come down and fill this gap, but literally everybody is looking at this gap. So sometimes it just doesn't want to get there right away. Sometimes they'll shake you out and put in a higher low, and then they'll make a rally up, and then it'll come down and fill the gap. It's not that far away at this point. I did say yesterday that if you close the week below this low here, down 79, that would be a pretty big negative. But we'll see. You also have the 20 week moving average in this area. So I'm really neutral on crude at the moment. I think ultimately it's going to go a little bit lower, but bigger picture, I'm bullish on crude, but medium term, I'm still kind of bearish. But for right now, for short term, I'm neutral. I don't want anything to do with it because I just don't know what it wants to do here. I don't have a good read on it. Don't have a good pattern to go off of. You do have a potential failed pattern here, but there's also support right in here, right with this gap, the 50, the 100 MA, the 20 week moving average. So for me, it's just a no, it's just a pass on that. So, but I would like to trade this if it gives me more of a pattern in either direction, but at the current time, I just can't do anything with it. XLE, nice gap down, but came nicely off the lows there, down 76 cents. Look at the bounce. That closed right at the highs of the day. Look at that surge there on XLE towards the end of the day, holding the 20 and 50 MA. So this has higher lows. Again, this probably does want to go test that upper 80, 89 area, 89 to 90 area. So we'll watch that in the coming days to weeks. XOP down 1.5, losing those moving averages, so that is a negative. We did fill this gap though, so we'll see if maybe that can get a little bit of support here. We don't even care about these trend lines anymore. That bear flag has failed, but you can see we did fill that gap right there. So maybe that can get a little bit of a bid off of that, but there's some definite technical damage there on the daily. Then OIH also testing 280, and he came off the lows with the 20 MA. So this is a little bit better now. If this can start to shape up more, this can go higher as well. But that's really all I have for it at the moment. Still kind of a sloppy pattern, but it did hold that 280 level, which we've been marked as an important level for a while now. Nat gas, that is about flat on the futures here, but I think the COMEX, or like flat on the COMEX, green on the futures, if I'm not mistaken. But either way, you have a green candle. We'll call it that. We had an inventory number today, and it came in hotter than, or I should say more bloated than expected. So 75 versus 70 BCF. And we got a pretty good dump on that number as usual. And the dip was bought here, and we came back off the lows. So definitely a little bit of a change of character. I talked about this. Like, big money's not going to wait for that number to change. They're going to buy while it's cheap before the number before the inventory starts to draw, right? They're not going to wait until a company reports earnings to buy the stock. It's you buy low, sell high. So what we're seeing now, I think, is accumulation. Dips are being bought. Despite that really awful number, you still saw the dip being bought here, and you still saw them support that 20 moving average. So again, to me, I think smart money is accumulating here because that number is not going to stay elevated forever. The inventories are going to stay elevated forever. And by the time they start to come down, this is already going to be rallying off the lows. And then the people buying are going to be the ones chasing as big money is selling into them. So that's just how markets work. But either way, nice little showing there for nat gas coming off the lows and getting a nice dip buy on the intraday basis. Dollar index. Here's another reason why I'm not too bearish. This is flat. It was actually red by the close here. It did come off the lows a little bit as the markets in the after hours there, but dollar flat with the market selling off, it's probably a sign that it's not a real sell-off. So there's that. I think at this point, it probably does need to come down and test 100. At that point, I do like the dollar a lot, but right now I think it's trying to put in that little consolidation pattern there. It's trying, but it came off the highs pretty nicely today, and I'm not so sure I love it that much anymore here, but it's not like it has that far to go. So anyways, we'll watch for that 100 handle here, and that could coincide, if the dollar goes down there, that could coincide with our 420 level. on the spiders and that big gap fill that everybody's looking at. Gold here, flattish to sideways for the most part. We hammered on that 1994 level. This has got to get back above this pivot here, 2028, to really kind of shape up. Did a little bit of micro technical damage yesterday, but nothing terrible so far for for gold there. Silver here, same kind of deal. Came back and basically kissed that 20 moving average. Now just putting in a little doji here. We'll see what this does. I think it wants to probably go sideways a little bit here, but I'm watching that dollar around that 100 handle. That may give the metals one more little pop here, and that may be in the cards as well. Platinum also, they should get through double top. I wouldn't short it there. You can if you want. I would stay aside. I think platinum's a freight train right now. And if we saw, anything with silver here, this didn't stop at double top. And neither did gold really. I mean, you got like 2 days out of it. If you want to scalp it, I guess you can on an intraday, like a day trade. I have no problem with that, but I would leave it alone right now. I think platinum is just a train right now, and I'm not interested in shorting it right here, even though I do think the dollar is close to a bottom. But copper here. So we talked about this little trend line yesterday, and I hammered on it today. It's holding the 100 MA. I don't have a bias too much on copper here. If you break this trend line, maybe it'll eventually get down to 375. That's where the math is, and it should get there. But it's been stubborn here, and it's been holding up really well, like some other things have been. One thing that's been very stubborn that showed a little bit of weakness today was Bitcoin. So let's take a look here. So I'm doing this video at 4:08. Bitcoin, this daily candle closes at 8 o'clock. So we got 4 hours. I would say you want to get back above this trend line by 8 o'clock because you're going to do technical damage here. Or at least you want to be above 28,204, which is the screen bar low here, which is basically where we are right now. We're at 28,265 because you run the risk of a failed breakout. And that can be very bearish. That could be a leading indicator for the market. We've seen that in the past, right, where Bitcoin breaks down like out of nowhere, and then 2 days later, SPY just breaks down, or vice versa. Bitcoin breaks out. Remember, Bitcoin was breaking out big time in mid-March, and spiders, followed, a week or so later. So it could be a leading indicator. We'll watch this, but I want to see them save this candle here. If they do, then again, the numbers haven't changed. We'd still be looking at about 32.5. If this fails, you go to 25. You will have some speed bump at that 50 MA along with these pivots, but you lose that area, it's going back to 24 to 25 there. So that's going to be the levels I'm watching there on Bitcoin. And again, we'll see if that's a leading indicator. Watch that 8 o'clock close though later tonight. Anyways, over to the spiders again to wrap up. Down just 50 basis points, Q's down a little bit more. Semi's finishing green. Look at that candle. I knew this was going to happen. So, I kind of said at the beginning of the video too, right? Like, this doesn't look like a real sell to me. And, we did get a lot of, volume came in at the end, 73 million. That's still not, that's basically, that's still 15 million shy of average volume, right? And all that volume at the end, 6 million shares, that was buy volume. So, could we gap down tomorrow? Yeah, could we have a repeat of February where we had this kind of inverted hammer here after that higher low and then a gap down and then more? Yeah, it's possible. I definitely can't rule it out. I just don't really see it. And right now the bears got to prove it to me. If the bears can prove it, then they can prove it. But and then we'll evaluate it next week. Again, we are in the risk period, so anything can happen at this time. But until I see the bears actually follow through for once, they haven't been able to follow through since early March. So until that happens, we're going to be neutral here to upside, especially until Opex is over with. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.